Joining me today is David Wolfin, President and CEO of Avino Silver and Gold Mines. Avino trades in the Toronto Venture Exchange under the symbol ASM, and it's ASGMF in the U.S. Avino has a very tight 27.5 million shares out and roughly $4.3 million of cash in the bank. David, thanks for joining me today.
Thanks, Rob.
Well, David, in the past couple of years, we've seen a lot of damage, in this mining sector. Market cap significantly reduced, a lot of value, but a lot of skepticism present as well. And as we all know, as investors, there are several key factors to consider, before investing in junior miners specifically. And I've outlined 5 topics that I'd like for you to answer.
Okay, sure. Happy to.
Yeah, number one, first and foremost. Management experience and track record. You've been around a while. What can you tell investors about David Wolfin, the man behind Avino Silver?
Okay. Well, management is probably the number one thing when you're contemplating investing in a junior mining company, and we've got a lot of experience. Our directors have over 200 years of combined experience and have operated mines all over the world. Specifically with Avino, we've been involved since my father founded the company in the late 60s and built the mine and commissioned it in 74. It operated for 27 years continuously, and there's not too many mining companies that can boast that. Closed in 2001, and we reopened it on a small scale in late 2010. We achieved commercial production in Q4 2012, and we've been making money ever since. I worked in the mine as a teenager. I took geology and business at Colorado State University, and then I also worked in the brokerage industry. I worked as a floor trader on the Vancouver Stock Exchange when I was in my late teens, early 20s. And so learned the finance industry then and joined Avino probably around 1990-91 and became CEO in 2003. So basically grew up in the industry and been around it my whole life. And some of the other people on the board, you've got Jasmine Yee. He's a mining engineer. He's a metallurgist. And he's been in the industry for over 40 years. And we've got excellent people down in Mexico, about 220 people working for us. A lot of them worked for us in the past, so they came back once they found out we reopened the mine. So we got good people, good, solid people.
Well, to almost piggyback that question, your financial track record. Like you said, you've been around for a while. What can you tell investors about what you've done on the financial side?
Yeah, well, we declared commercial production in Q4 2012, so we've got a year under our belt now. And Q3 2013 was just announced, and our cash costs per ounce at San Gonzalo is $5.72 an ounce. And then we have another area we're producing from, we call historic stockpiles, and that's producing at $11.78 per ounce. So if you combine the two, our cash cost is under $7. It's $6.86 for a silver equivalent ounce. Now, if you want to look at the all-in sustaining costs for San Gonzalo, it's $10.51. For the historic stockpiles, it's just under 15. So our combined and all-in sustaining cost is $11.35. So at current prices, you got silver hovering around 20. We're making money, and we've got a lean operation there, and we're always looking for ways to even improve on these numbers and get them even lower. So we're protecting ourselves to the downside of metal prices, and we're hoping, we're optimistic that metal prices will improve in the next couple of years.
Tell us a little bit more about your project.
Well, Avino has the distinction of being the very first mine ever discovered in the state of Durango. In 1555, Captain Ibarra from Cortez's army claimed to have found a mountain of silver, and they formed the city of Durango to mine it. So lucky for us, we've got hundreds of years of infrastructure built all around the mine. It's paved right to the doorstep of the mine. It takes a 1-hour drive from the city of Durango, from the airport, to get to the property. So we're not in some remote area. We're surrounded by villages. There's probably 8,000 to 10,000 people that could walk up the hill to where the mine is, so they can walk to work. And then probably within a 10 to 15-mile radius, there's another 40 to 50,000 people. So we've got access to every type of skill and labor. So it's an excellent location. Mexico is number one in the world for silver production. It's a pro-mining country. They've got mining in their blood. So we're very fortunate to be located where we are, and we think it's one of the best places on earth to have a mine.
Right, with that, talking about the resource, you hear the life of mine. Please elaborate a little more on the life of mine.
Yeah, well, we came out with a new mineral resource estimate this year, and measured and indicated we have about 27 million silver equivalent ounces, and then inferred it's another 26 to 27 million, and so those measured and indicated and inferred are between two veins, and there's dozens of veins on our property that we haven't even explored yet. We've had limited surface exploration, so our plan is to generate as much cash flow as possible with our expansion that's happening right now, and then pick up more exploration and look to develop this property into a world-class property. The property next door to us is owned by Coeur Mining. They paid earlier this year $350 million to acquire that property, and it's got anywhere from 150 to 200 million ounces of silver equivalent on that property, and it's the same geological setting. So there's a lot of potential that are not exposed and at the surface. So we've deployed some new techniques, new geophysics, IP geophysics, and a lot of surface sampling, and so we're putting all that together in a 3D model, and we're planning to do quite a bit more drilling in the future. We own our own drill. We actually have two drills, a surface drill and an underground drill, so our costs for drilling is probably 70% of what commercial rates are. So we're in a good position to continue to grow the operation. If you look at our throughput right now, we're processing 500 tons per day through the mill, and we're working on our expansion. We have 1,000-ton-a-day circuit in the mill, and we're going to bring that online in 2014. So by the end of 2014, we'll be producing at 1,500 tons per day. And alongside that, we're dewatering the historic Avino mine, and we're going to start mining where we left off in 2001. And if you look at the historic production numbers in 2001, we'll be mining at the same location and the same throughput. So our last full year of production was in 2000 in this region, and we produced 1.7 million silver equivalent ounces. So if you add that to San Gonzalo, our target is looking at becoming a mid-tier producer within the next couple of years. And the company is debt-free and it's unhedged.
Well, my last point was exploration upside, which you pretty much covered pretty in-depth with that last point you made. Anything further you'd like to add?
All these dozens of targets, we've got all this raw data. We did 80 kilometers of IP geophysics. We started to do this between 2006 and 2008 when we acquired 100% of the property, because we were only 49% owners up until 2006. Now we own 100%. So after that, we started to deploy new modern technology, IP geophysics, and all that was mothballed in 2008 when the global financial crisis happened. We decided at that point to get cash flow, and then once we have cash flow, to go back and look at more exploration. Well, we're now just starting to pick up those pieces again for exploration. And next year, in the second half of next year, we're planning to do some more exploration. But we want to get Avino dewatered and the expansion done to maximize production. And our costs for at Avino will be less than San Gonzalo because it's a bigger vein system. It's lower grade than San Gonzalo, but it's going to produce 3 times the amount of metal that we're producing from San Gonzalo. So 2015 will be a real breakout year for the company because we'll have both mines operating at the same time, and we'll be producing quite a bit of metal.
And it is obviously out of your control is the price of the metal at this point.
That's the only thing. Yep.
I mean, you've done a very fantastic job, I'd have to say, in keeping your share structure tight. I think 29.5 million out.
27.5.
27.5. Thank you for correcting that. But, very tight share structure.
I mean, if you look at the ounces we have, in measured and indicated, there's an ounce per share. In inferred, there's another ounce per share. So there's every way you look at it, the stock is undervalued in today's market. You look at our earnings per share, you look at the ounces in the ground, and it's not. Our market cap is an indication of our operation. It's the global market conditions. So I think we've seen sellers' exhaustion in the junior miners. They're all bouncing off bottom bargain basement pricing, and anyone that's interested in investing in the sector should be looking at these companies when they're at the bargain basement pricing, and I think the metal prices are still hanging in there from where they were 10 years ago, and a lot of people think they're going to go up again in the next few years. So, Avino is a compelling story.
Well said. David Wolfin, President and CEO of Avino Silver and Gold Mines. Thank you so much.
Thank you, Rob.